Hello everyone, this is Juan Sarmiento and today is Friday, July the 2nd. Let's take a look at the S&P 500. We can look at futures, by the way, and all you have to do is enter /ES in your trading account, trading platform, and that should give you a chart of the ES futures, and that way you know what may happen during the day before the market opens, and it looks like it's going to open higher. You can take a look at the 4-hour chart, for example, and that gives you a very good idea of what's going on. So the market's going to go yet a bit higher. And let's take a look at the SPY, what the price is currently, and before the market opens. It also gives you an indication of what the market is going to do before it opens. It says $431.99. We have available $415 from previous investments, so to speak, introduction into our account. So that's not going to do to even buy one share, because it is about $15 or $16 more. So I'm going to enter yet another $500. Okay, so I go to obviously you simply, if you have a real life account, you just simply add $500, talk to your broker, send them the money and all that. But because this is a paper trading account, I'm just going to come here to the account statement. You can follow along if you want to, and if you do, simply press the command key and say adjust cash. And then here you're going to add $500. Make sure that you put a plus sign ahead, and there it is. So we are adjusting our cash position by $500. That will give us $900 some. So let's say okay, and then $915. Now we can buy one share. So let's go to the trade tab, and this is shortly before the market opens. So we can place our position. It doesn't matter. It will simply execute when the market opens, and if the price you are bidding is within the range of the stock. So I'm going to click here on ask, and that will give me an order for 100 shares. We are only buying one, and you can see that the current price is $431.91, so it has to be within that range. Okay, so let's say natural or mid, and I would say if I do this, it's likely to fill. If it doesn't, then I adjust it after the market opens and let it execute. Okay, limit, it means only if the price is what I bid or lower. Okay, it's already lower, so I can just unlock and lower my price to the natural. Okay, let's send that off, and then we'll see when the market opens what happens. I end up with $483, which I probably would be able to use that next week. Okay, so I keep entering my $500 every week, and occasionally we don't have to enter. Probably next week we wouldn't have to enter any more cash. We could simply use our savings to get to the next position. If you want to see how well we're doing, go to the monitor tab and click on account statement, and here it shows you what we have done, we have made year to date. P&L, that profit and loss year to date, and of course it's $165.78. Okay, very good, and that is with an investment of $5,665. Okay, so you make that calculation, how long we've been in this process, and then you can see your yearly returns. Okay, so far positive. Okay, if the market collapses, then your buying price will be reduced, and that's called dollar cost averaging. So every week you enter a new trade, and you are actually paying the average of all those times in which you enter a trade. If the market goes down below, instead of saying, oh, now I'm really screwed, I'm losing money. No, you say, this is a long-term investment. I'm going to buy new shares as the market goes down so that when the market rebounds and goes up again, I make money. Okay, so we don't really are not too hurt if the market goes down a little bit, eventually coming up. That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.